Hello, and welcome to the session on QuickBooks Chart of Accounts, specifically for property investors. When you go to your QuickBooks account for the first time, you should see these menus. If you go to Accounting and Chart of Accounts, this will show you the codes in which you will allocate your income and expense. The chart of accounts is split into two main areas. The first one being your balance sheet. Your balance sheet is your assets and liabilities. For property investors, that's more likely to be your buildings, your properties, as far as an asset is concerned. And for your liabilities, it's likely to be mortgages. Mortgages is what you owe to the bank or building society. We will go through in more detail shortly. However, then we move on to your profit and loss. So your profit and loss are your income and your expenses. Now, these are split up into three areas. The first one being your income, traditionally your rental income. However, there is other income as well. So should you earn interest, but by any means, then that would go here. Then you have your cost of sales. Now, your cost of sales is directly related to a particular property. So what you see here should be your costs that you may incur on having a property, regardless of the type of property it is. So if you do have a HMO, it stands to reason that you should have a license fee, and it's the same with HMO utilities and cleaning, etc. Now, it could be that if you're using single let, then you would probably just have your mortgage interest and your building's insurance. Obviously, if your building is void, your property is void, then you will incur charges, your utility charges, whilst it's empty as well. So just as a reminder, cost of sales you can directly relate to a property. And then finally, you have your expenses. So these expenses relate to your business and cannot be directly related to a property. In other words, your audit and accountancy fees. You pay this whether you've got 10 properties or 100 properties. But again, you cannot allocate them to a particular property. It's the same as well with business insurance. And when it talks about light, heating and power here, it's talking about your business premises should you have them. And it will be the same with rent. Do not mistake this for the rent that you collect. This is your office rent. And the maintenance and repairs you see here relates to your business. Now, there may be, in this particular chart of accounts in QuickBooks, there may be items that may not, that may not apply to you. So in other words, you may not have any motor vehicles that have been bought by the company. If this is the case and you do not wish to have this here, then all you do is you just delete. Therefore, it's now inactive and you do not have the ability to be able to put in motor vehicles. You can, if you wish, add them at a later stage. So if we go into your buildings, the first thing you can see here is your buildings, your properties. Now, if you prefer to change the name of this, then you just click edit here, and the name is now properties. As you can see, this has been saved. The other thing that you need to record here is as well, you've got capital improvements. Just going to edit that because we've got duplicated numbers. So your capital improvements is where you have added something to the property that wasn't there before when you purchased it. i.e. for a HMO, if you are adding on suites that wasn't there before, then it goes to capital improvements. The same with any extensions. So if a loft conversion, so it wasn't a room, a rentable room beforehand, and you converted the loft, then anything within that room that wasn't there before is a capital improvement. Then if you are if we scroll down to the cost of sales, you will see here we've got repairs and renewals. So if you are doing a large refurbishment, but you're replacing items, replacing kitchens, replacing bathrooms, rewiring, redecoration, so the optimum word is then it goes to repairs and renewals. If you're in any doubt, what I suggest you do is you add everything to one of the codes, and then your accountant will then ask you, when it comes to your year end, what the split is. The more information you have, the better it is. So again, this is the basic chart of accounts. So this is what you allocate any costs that you incur or any income that you receive, regardless of the income. The last thing is equity. Please do not misunderstand this with equity in your property. This is the equity that the company owns, and your company is a separate entity to yourself. In our next session, we will look at the allocation